Hi, this is Dustin Hobbs from the California MBA. Welcome to Connect, our monthly podcast featuring one-on-one interviews with movers and shakers in the mortgage industry. As you know, this month, while everyone's stuck at home, going through their Netflix and Hulu queues, we're trying to do our best to provide some additional content, some bonus content. So each week we featured a bonus episode of Connect. And this week, I'm excited, we're going to be welcoming in Clint Rockwell. He's managing partner at Buckley's LA firm, and Clint's been involved with the California MBA for many years, top-notch attorney in the industry, well-known throughout the nation, and he's been a good friend to our association. I'm excited to hear what he has to say about the industry, where we're at, and sort of there's been, to say the least, a bit of government and regulatory activity over the last few weeks, and Clint's been on top of that. So let's jump in here, Clint. Let's first, before we get into the specifics of some of the legislation and regulatory activity that we've seen out there, what's your journey, your own personal journey from how you got started in the business and sort of how you came to where you're at now at Buckley?
Yeah, thanks, Dustin. So I think, I don't know if anybody goes to law school saying I want to be a mortgage regulatory lawyer. I don't think that's a common first year refrain. How I came into it was in law school, I kind of gravitated towards more financial focus, more less litigation, kind of more complex statutory type subject matters. And then after law school, I did an LLM in the regulation of financial markets, where I really got interested in kind of at a macro level how financial markets are regulated and how different levers can be used to cause certain market behaviors from happening or not happening. And, I fell into a great opportunity with Jerry Buckley and Joe Kohler and a number of folks that I continue to work with today. And I stuck with it because it's one of the areas that in the law where it's just always intellectually challenging. There's always some new regulation. There's always some new approach, new ideas from the business, and they need to get operationalized. They need to get go through thorough issue spotting, and there's always something interesting whenever you go into work. I like the fact that when I go in, I don't necessarily know what the questions are going to be. And I also like that there's always something new, that it's not just, doing the same thing every day. And there's different parts. There's, tactical, there's strategic, there's policy, and everything in between. And it's a part of the financial market that is so important to not only the economic system in the United States as a whole, but also to individual people's lives. Right. This is the biggest purchase they're likely to ever make in their life. It is the foundation not only for their economic health, but also for their family and the place that they congregate. And having all of those touch points and the financial, economic policy, legislative issues that intersect with that market is it's a very interesting and rewarding practice.
Yeah, I don't know too many. I can't imagine there's too many sort of sectors of industry that look so unrecognizable from one. Even like at this point, like every 5 years, it seems like you could go back and it's a completely different world than it was before. So speaking of,
it does tend to get remade every once in a while, and with each new administration, there's new priorities, and that changes. That has a trickle effect as well.
Yeah, well, I think it's certainly in contrast to how some other world markets handle things. I mean, we've got not only all the regulators at the federal level, but then you've got 50 state regulators, and even amongst the states, you've got multiple regulators and stuff like that. So I mean, there's a few levers, as you put it.
We deal with all kinds of different clients from all kinds of different backgrounds, And it's funny, the international clients, the ones from the UK or Germany or elsewhere that come in, and they are just like aghast. They can't believe the kind of system we have. And it's just like, guys, this is federalism. Get used to it. If
Yeah.
you want to be in this market, you just have to navigate it. And oh, it's not efficient. It's
No.
not a lot of things, that they're used to, or unified or consistent, or any of those things. But that's part of what makes it very interesting.
Yeah, well, and Con Law 101 will tell you it's not meant to be efficient. It's meant to
Yeah.
be, incremental, to say the least. That's the best way to put it, is incremental. So what's on the front pages of every newspaper these days, front page of every news site, is obviously the continuing fallout from the COVID-19 pandemic. What's your sense on how it's affecting we've asked mortgage bankers, we've asked some tech companies, how is it affecting the legal community?
Like everybody else, it's getting to the new normal. There's and how the legal industry is so varied. I mean, even our own firm, there's enforcement, litigation, and regulatory, and much bigger firms have and we have transactional and other things, but bigger firms have different groups that do different things, and I think it hits each of those groups very, very differently. I think as far as litigation is concerned, a lot of things are being, extended out. But in the regulatory practice, which is, most of what I do, it's shifted in terms of that priority and the type of questions that we're getting. But it's not slowed, at least not yet. I think a lot of folks in the legal industry have been bracing for or felt that slowdown. And it really kind of is unique to the practice that you have and that you're doing. But because there's so much guidance coming out and it's happening so fast, and a lot of the guidance doesn't, it's solving a very specific problem or set of problems, but there's all of this infrastructure and systems in place that it affects. And because it's happening so fast and the usual policy-making process isn't able to function because it's happening so quickly, it has a lot of unintended consequences, or consequences that that people didn't necessarily foresee, and that brings with it regulatory uncertainty, regulatory issues, and we're reacting to that in the mortgage context, especially in the servicing context. But even when this first started, I mean, just how do you deal with an appraisal? How do you deal with an inspection? Just the normal processes that have been the normal process for so long, dealing with that and having those steps be either adjusted in a way that they haven't been before, but having that need be acute for them to occur. All of that has risk implications. It has practical implications, and as outside counsel, we get a lot of those questions. And part of being in a law firm where you have lots of folks like ours that are involved in a lot of the same things. We don't just have one mortgage regulatory lawyer. We have many of them. Part of this challenge in this new environment is coordinating the advice, because there isn't a 20-year history for how you answer this RESPA question. Sure. It's all happening very, very quickly.
Yeah, well, and what's amazing to me is there's been so much activity at the same time that the industry, I mean, it'd be hard enough and difficult enough if it was, in a sense, industry running at, sort of normal, whatever normal capacity is these days. But, we're at, full capacity, everyone's pipelines just bursting. And then suddenly we get all this activity. So, sort of looking back maybe on the last couple of weeks. Go ahead.
Yeah, and then you have different parts of that market having to react differently based on investor demands and other things. And even the borrower or the applicant's situation is so dynamic right now, because maybe they were furloughed, maybe there's all kinds of things that are happening, and you just don't know from one day to the next. And dealing with that, dealing with QMs is going to be very different than dealing with non-QMs with that investor market. All of that is affected by the capital markets issue, and in setting the locks and having all those swings occurring to such an extent as they are now is it's challenging, not only for the industry, but also to provide sound legal advice in a very, very rapidly changing environment.
Yeah. So, to that rapidly changing environment, I mean, over the last couple of weeks, taking into account maybe all the regulatory activity and legislative activity that we've seen, what do you see as the most significant, either way, good or bad?
In terms of kind of the policy actions that have happened, I mean, so obviously, I think the CARES Act is the 800-pound gorilla. I mean, it's intended to kind of stabilize those workers, families, small businesses that are the foundation that is dependent upon to buy a house, make your mortgage payment, and all of that. So I'd have to say that the CARES Act and I guess today the extension of that assistance as being the most significant. But it's an interesting, just from a policy standpoint, it's a very interesting piece of legislation, and then kind of the follow-on effects are interesting because unlike the last time around that we're in a crisis mode where moral hazard was the order of the day, and everybody was thinking about, okay, we want to stabilize these markets, but we don't want to incentivize bad behavior going forward. How do we balance those? Because this is a complete externality that was not inherent in the credit markets at all. This is not the credit market's fault. This is not the financial system's fault. This is not about any of those levers that were adopted by Dodd-Frank and were put in place to stress test. Because this is such an externality, the approach is different. And how that approach, I don't think we've pumping this amount of money through these systems as fast as it is being pumped through has an amazing amount of potential for issues, legal issues, and also from the big corporations all the way down to a sole proprietorship. And it's going to remain to be seen how that all works out. And we aren't even, I don't think we're capable of figuring out how all of that fits together right now. There's just so much happening with even just this one. It's a significant piece of legislation, but it's only one of a patchwork of a lot of different pieces that are designed to solve similar problems.
Yeah, it's amazing. We're going to be, I think that it's going to, we always kind of say, and I know you regulatory guys like to talk about, when the dust settles, I mean, the dust is going to take a long time to settle from, even just like you said, just from the CARES Act. So looking forward, where else do you see that policymakers and regulators can be taking action to sort of mitigate the damage that is being caused right now to the economy?
Well, I mean, I think that there's going to have to be very specific assistance to the non-bank community in the liquidity, in the area of liquidity, because it's just a very different model, and the government has issued a lot of guidance that is specific to banks. And non-banks are, the potential for non-banks to suffer a cash crunch because they're at the end of a daisy chain of warehouse or investor or whatever, right? That kind of brings that, along for them. They don't have the luxury of having a deposit base to catch their fall. And so I think that, there's going to have to be some significant attention on that part, because if you look at the delivery model, even for PPP, a lot of that's flowing through when the rubber hits the road to the actual borrower through non-banks. And there's going to be, I think there's a little bit of a hole there. And in the mortgage context, servicers are, they're going to have a cash crunch as well, and that's, and they're having it, and that's going to be I think a significant thing to address.
Yeah, it's amazing. You're totally right. That I mean, in the news and all that, whenever they refer to financial institutions and banks, it's always the depository banks that is the first thing that comes to your mind. And I know everyone in our industry, as I'm sure, had to explain to someone outside the industry, a friend or a colleague or a family member at some point or another, the difference between those two and why it is such a huge difference. And like you said, it's the non-depository independent, the IMB is a completely different animal. So you make a good point. They do need some attention at some point here soon. So speaking of liquidity,
the other thing about the dust settling is going to be, there's so much at the state level and the local level in terms of guidance. And because it was rolled out so quickly, some of it doesn't have the force of law. A lot of these things are encouraged rather than required. And that leaves a big potential for kind of Monday morning quarterbacking on, well, why did you adopt this policy in connection with this issuance and not that in connection with that issuance? And I think that those opportunities for interpretation and issuing that kind of guidance in that fashion, although speedy, does leave members of the industry open for future challenge.
Yeah. So a couple weeks ago, we had, everyone's aware of this. We had major liquidity crisis that really threatened the existence of the industry. Was that sort of an existential threat for a few days there? Do you think that we've sort of solved that issue, or do policymakers need to go back? Is there still work that needs to be done to maybe tamp down some of the uncertainty?
I think that the uncertainty level is still too high. I think we've saw that the whipsaw of the rates was solved, which kind of calmed everything down. But I think that it has the opportunity to come back in relatively short order if the fundamentals aren't addressed.
Interesting. Okay, so yeah, it's still. Do you think it's like a margin call issue still, or is it just a?
No, I think I think it all depends on how the capital markets are react, right? If we have a really bad news cycle and things start tanking again, then that and then the Feds pump money into the system, that creates that sine curve that created so many problems.
Well, and it makes me wonder too, when everyone does kind of go back to work in this fall, we're inevitably going to have another, a surge, if you will, of coronavirus illnesses. It's just a fact. We can't have the numbers go down for so long like we want them to, and then when
Right.
everyone's sheltered in place, but eventually when we come out, there's going to be more illnesses. So it does make you wonder if capital markets can be prepared to take, in a sense, sort of that initial rush of bad news that will come out.
Well, there are certain things can be, you could have, you could step away from a lock situation, but then you have the opportunity, then your competitor who's doing locks has it, it's just that level of uncertainty. It really does require some guidance.
Yeah. Okay. Well, switching gears here, where do you think we stand right now? I know different states and municipalities have all issued, some form or another of forbearance and foreclosure, eviction moratoria. Where do we stand with that? It's sort of a mixed bag from my point of view. Where do we stand from yours?
Yeah. California has, their issuances, but it's a little bit all over the place in different states. And keeping track, one of the issues that we're seeing is that states adopted a particular set of encouraged standards, and then they've been replaced maybe once, maybe twice, because they were set to sunset or whatever. But they're not really telling anybody. So keeping track of all of those moving pieces is a challenge. And then how to structure whether it's capitalized, and is this a product that's going to be sold to Fannie or Freddie, and then how those rules overlay on the local rules. It's all a little difficult to keep track of, but it's just a matter of stacking up the various buckets that you have and figuring out how to triage each one and come up to as a consistent response as possible.
Yeah. Well, and it makes me wonder too. I mean, it's terrifying enough to try to handle that if you had a large compliance department. But I mean, if you're a small IMB with maybe just a couple or a handful of people on your compliance and regulatory team, I mean, it's going to be a huge challenge. So I was, we have talked about this, but I'm curious to know, you guys have a regulatory tracker that you developed over there at Buckley. I think I would imagine for this very purpose, to help folks sort of keep track of what's going on, because like you said, there are buckets everywhere of different standards, and whether they're competing or whether they change over time. I mean, tell me a little bit about what you guys have developed there.
Yeah, what we were finding was, we were doing kind of what everybody else was doing, which is we were keeping track of these issuances as they came and doing kind of a reverse cron situation of most recent first. And then when we got to like number 380, we said this is not gonna work. And so what we did instead was we have this technology arm that we've been building for the last couple of years called Winnow. And we got a couple of those folks in to try to organize the information that we had into a database, and we summarized each of the issuances, and then we organized them so that I can very specifically look at what licenses I have, my institution type, the regulatory body that I'm interested in. Am I looking for federal stuff? Am I looking for stuff from Fannie or Freddie or from different, each different state? The type of guidance. If I'm an originator, I really only care about origination guidance. I don't really care about, the collection guidance. So, for everything from licensing, origination, servicing, loan mod, collection, foreclosure, all of that stuff, you can kind of pinpoint, that. And then, as I mentioned before, the guidance level. Is it something I have to do, or is it something they want me to do? And then the type of product. So we're not only covering mortgage, we're also covering consumer, auto, student, commercial, unsecured.
And is that available? The link to check that out, is that on the Buckley website?
It is, yeah. You can get at it from the Buckley website. You could also go directly to covid.winnow.law to check it out. And since this is for the CMBA, actually California, we have outside the paywall, so you can just look at California all you want.
Well, hey, for all the California lenders out there, you have no excuse not to at least as much as you can be on top of what's going on.
Yeah, and it's a challenge because it does require an update, updating every day, because we're finding things are getting replaced, and it changes the answer.
Yeah, well, it seems like in some ways, within the industry on the marketing side, there's always talk about how to break through the clutter and the noise. But at this point, when every regulator in the country is, issuing guidance at the same time, it's almost like from their perspective, they're thinking, how can I break through the clutter so it doesn't just become a press release that gets lost?
Otherwise, it's a data dump. It's just this and where do we even start? So that was the objective anyway, was to try to help with that.
Yeah, that makes sense. So switching gears a little bit again, we've talked about the regulatory, the policy level stuff. At some point or another, obviously, we're in it. A lot of these, a lot of the guidance and the policy stuff here is going to turn into the litigation. Where do you see sort of maybe the first wave of that? What will be, sort of maybe the topics covered? What do you see as the near future for litigation?
Yeah, in terms of kind of the litigation that I see kind of coming down the pike here, which, I mean, how can you pump this much money through the system and not have a lot of litigation kind of on the back end? I mean, you're already seeing some of these, class actions that look at prioritization for PPP, right? But I think there's going to be a lot of fraud actions. I think there's going to be a lot of false claims. I mean, we saw that in the last crisis. There was a lot of false claims actions. I think, and those have kind of died down. There really hasn't been a lot of those in the last few years on the false claims side. And I think there's going to be a lot of UDAP. There's going to be a lot of UDAP with 1A and a lot of UDAP with 2As. And it kind of goes to that issue that I mentioned of encourage versus required. So at the state level, even, something, is encouraged. Well, if you don't do it, is that a UDAP? What's the signal there, right? And the other issue that I see is that even kind of, accepted practices that have been traditional accepted practices, because the environment is so different and so acute now, there are certain things that in normal times would not be looked at twice. And because this is such a unique environment, that there could be UDAP litigation around those practices, payment accommodations and how they were processed and certain fees, right? I mean, you can't go down the street and put the money in the lockbox. So, I mean, it's simple things. I think, I would say if you're looking kind of around the corner of, where could the bullets be fired from? I think, looking at your traditional practices, things that you might not have thought much about in the last few years, and then kind of lay those onto, well, what's the current environment? How are those affected? Should I be thinking about those differently? Because I think that there's going to be some litigation around that. And I think, fair lending, I think it's going to be, a big deal. Handling how modification and forbearance requests are processed. I mean, all of those fair lending issues and standards, which are very hard to implement in the environment that we're in because it's so fast. All of those are going to be ripe for litigation. And then, FDCPA, TCPA, how you reach out to people is also, I think, ripe for litigation after we get, around the corner on this.
Yeah, it makes sense. I mean, the TCP stuff, I know is just so specific on, communication with borrowers. And I mean, a lot of this guidance.
Yeah, I mean, if you're using an auto dialer, use an auto dialer to reach out to people to ask whether they need help. I mean, that could be a TCP.
Yeah, totally. I'm curious, just like you, I think where things go and how courts interpret that, that'll be curious to see coming forward. So speaking of litigation, then what would be if you had one piece of sort of pro bono advice to provide for the industry out there, what would it be?
I mean, I guess I would focus on that UDAP issue. Everybody has their own, modus operandi for how they do their business. And we're all focused on reacting.
Just for clarification, just for folks who may not be familiar, that UDAP, can you define that real quick?
Yeah, unfair, deceptive acts or abusive practices. So, basically every state has their own UDAP law. And then the CFPB has a UDAP with an extra A, which adds abusive. And the FTC has Section 5 of the FTC Act. And they all kind of center around, unfair, deceptive, and abusive practices. And it's a little bit of an eye in the beholder kind of issue. And so I would focus on, kind of stepping back a little bit to the extent it's possible at all from the deluge and looking at, your practices, even those that have been traditionally accepted, and just look at it from, the unique moment in time we're in, from that UDAP lens of, is this fee, should I be charging this right now? Or should I, and maybe the answer is yes, and that's fine. But even asking that question, I think, will help, because I think that there's some, significant risks that could arise later when people are second guessing, the approaches that are being adopted kind of in this very, difficult environment.
Yeah, difficult to say the least. So, I mean, one thing that's also been difficult is, if you're, especially for those who are maybe younger in the industry and don't have established connections yet, or they're still working on establishing those connections. And I know, we've got folks in our business that are been in for 30 years, and they're still building their business and still see networking as crucial. But obviously right now we're not able to host in-person networking events, or there's no more cocktail hours right now. So if you had any advice for especially someone younger in the industry on how to plug into the industry right now, what would it be?
I mean, it kind of depends on where you're coming from, right? If you're in the law part, if you're in the kind of the industry part, the policy part. But I think, sign up for webcasts, newsletters, try to be present on, those Zoom and other visual media opportunities, and try to engage, and then, make sure that you're engaged at a point where you can reach out to the people that you're interacting with for further dialogue. It's very hard right now to do that. But what the CMBA and the MBA are doing on the online events and so forth. I think everybody's having to react. As a law firm, it's tough to kind of keep everybody visible and make sure people don't get lost behind their computer screens. But this is kind of where we're at, and if you can figure out ways to engage through those media, reach out to past and connections as well, and those new connections, I think that's the best anybody can do right now.
Yeah, well, and I'll just add from an association standpoint, and this probably goes for most other trade associations, and certainly those in our space, that we are absolutely doing as much as we can to provide as much content as we can. And if you're a member of an association like the California MBA, you've already paid for it, so get involved. Email or call or text or something. One of the the folks at that association say, hey, I want to get plugged in. How do I either speak on a webinar? How do I if I want to be thought of as a thought leader on a certain topic, how can I submit an article for publication in a newsletter or magazine or something? So I think you're right. It's just a matter of plugging yourself in. So closing us out here, I could have an entire webinar or entire interview talking about just this topic, because it's so interesting to me. Because my background prior to here, I worked in the California State Legislature as a staffer, and that's in a sense, one of my passions. And so it's advocacy. And so from your perspective, someone who's in the policy weeds on a daily basis, what would be your advice, or your what would you say to someone in the industry maybe who didn't see the value in advocacy, especially groups like the California MBA or the National MBA that do advocacy work? What's your what would be your pitch to them as far as why they should care about advocacy and how it affects them?
Yeah, well, look, I'm preaching to the choir a little bit, since you and I are the only one on the call here. But I can say that if you were doubting the value of something like the CMBA or the MBA, this is the moment, right? This is the moment where that all kind of becomes very evident, that there is tremendous value, because mobilization of the issues to provide feedback gives a voice to the policymakers that are dealing in real time. If you're a policymaker, if you're in the governor's office, these are who are they going to reach out to? They're going to reach out to the CMBA. They're not going to necessarily pull 1,000 mortgage bankers to figure out what they have to do at 8 p.m. that day. They're gonna try to find that that fulcrum, and they're going to try to get as much information as they can to make the best decision that they can in real time. And having the opportunity to have that connection to the industry group and provide feedback and provide ideas, that's how it finds its way into policy in real time, like we are right now. The other thing to keep in mind is, on the advocacy work, is sometimes you don't want to be the person raising your hand either. Sometimes you don't want to be the one on the phone spending 3 hours on the phone with your congressman, and having a trade association that can gather those that feedback and deliver it in to willing listeners is a very important part of where we are right now. So I'd say that, you know, it's just critical.
Yeah, well, and like you said, if this doesn't convince you that advocacy is an important thing right now, then you are, you know, you are asleep at the wheel. Hey, Clint, thanks for the time today. That's all we've got for this episode. Connect. Make sure and check out what Clint's doing. The firm's website's buckleyfirm.com, and make sure to check out their regulatory tracker there, and keep up to date on all the changes that we're seeing in the regulatory and policy front. So thanks again, Clint, and we'll see you next time on Connect.
I appreciate it. Take care.